This week on Case Studies with the Biz Doc, it's WeWork, the $20 billion workspace sharing company you've probably never heard of. Where did they come from and how did they get there? This week, WeWork. I'm going to do three things this week on the case study. The first, I'm going to take you on a walk through the history. Where did they come from? Second, I'm going to show you where they're going, at least what they say and what I think. And by the way, along the way, if you've got some thoughts, leave them in the comments. I love to read them and understand what you're thinking. And also, if you get ideas for future case studies, let me know that too. And the third thing I'm going to go to why it works and lessons for you. You don't have to be a 20 billion startup to get some really important lessons from the guys at WeWork. Let's dive in. It starts in 2008 in New York City. Adam Newman opens a baby clothes company. He had served time in the Israeli military, in the Navy as a matter of fact, and had come to New York to start a business. He's in a building that had a lot of vacancy in it apparently, and he runs into Miguel McKelvey. And Miguel was an architect. Together they get together and they're thinking about this vacant space, how they could do some sort of sharing with it, and they were conceiving business ideas. The bright idea would be Zen Desk that they founded in 2008 to share. Well, a couple years later, the name changes to WeWork and they're off and running. And once they're off and running and they knew they had something going, what do? You raise money from qualified investors. It started with $1 million that was raised toward the end of 2012, and they had about 4 of these fledgling locations in New York City. Now, shortly thereafter, they raised about 6.9, and this was all the seed round. Now, I have a hard time calling $6.9 million seed, but what it means is some people that had money were really believing in this, and even though it wasn't the official first venture capital round, people thought this was going to go, and they had 4 locations up and running to prove it. And where do people need space? Places like LA and San Francisco, where you have little startup companies, little production companies and media, a lot of people that need office space for a short time, but they're really not into paying some of the larger office space companies the kind of dollars per square foot. Well, WeWork was focusing on the kind of spaces that would be tailored to those people. So it's a beautiful marriage of price, market, and concept. They opened one in LA, one in San Francisco in the beginning, and guess what? San Francisco's down the street from a lot of money in Silicon Valley, and they raised $17 million Series A, and WeWork is officially off and running. They began to fill these locations, and 1 year later, they raised $40 million to open in Seattle. Now, what's interesting here, you say, gosh, how'd they go from raising this to raising this? I mean, that's like over double the amount of money. What it was showing you is it was scaling and it was working. And in the real estate business, you need capital to start, and so capital is what they were raising. A year later, they raised $150 million. Now, what this is a clear sign to me, and everything I've read and the research I've done on it shows that the venture capital community was like, this is really working. This is working and a half. And when you think about things that scale, and I'm going to get back to this in a minute, simple concepts scale, and they tend to scale fast, but you have to go fast because simple concept means your defensibility is also low. In other words, I could go out and copy you if I had enough money, started buying buildings and doing things like you. So you have to work fast to entrench your brand and start getting market share. And that takes money to go fast, but the venture capital community, like with Airbnb and Uber, and why don't you go down and look at the links below and check out those old case studies, and you will see how those simple concepts also scaled very, very quickly. Anyway, they raised $150 million. 2014 comes along, and they're opening in DC and in London. This tells you that this is scaling not just in the US, but in the tech hubs and the startup hubs that didn't have to be fully tech. How fast was momentum building up? Well, by the end of 14, they raised another $355 million. Now, what happens along the way now, you've got these 2 guys that came from baby clothes and an architect and Israeli military, smart guys with good disciplines, but the money that's investing in them is serious and big money. They're looking for adults to be in the room. That's not to offend you founders and CEOs, but there's times when you need to go out and get adults, especially when you're talking 9-digit fundraising. Well, who did they go get? They went out and got the CFO of Time Warner. He came on as president and COO. Now the investment money says we've got founders, we've got a president who really is experienced. He was the CFO of Time Warner, a multi-billion-dollar company, and now WeWork is about to become a multi-billion-dollar company in terms of its own valuation. So those are the milestones you have to look out for as an entrepreneur, and sometimes it's time to bring in an outsider you can trust because it makes the investors happy, and actually it's going to help you go fast too. Shortly after bringing on the CFO, they hit 54 locations. Now they have more than 50 locations. That's a lot of leases and a lot of property to be keeping track of. And again, they've strengthened their team to do so. So much so that in the spring of 2016, they raised $434 million at a $16 billion valuation. Now hang on a second. That's from 2010, 2008 to 2016. That's barely 6 to 8 years, and you already have a $16 billion valuation, which makes you more valuable than Twitter on the stock market today. And there's only one word for that, and that is damn! That is a big valuation in a short amount of time. But it shows you the momentum that was going. But guess what? WeWork is just getting warmed up. At the end of 17, they raised another $690 million, and who shows up next? Softbank and Masayoshi-san, the incredible investor from the mammoth bank private equity firm that is Softbank. They invested $4.4 billion. $3 billion was pretty much direct into Softbank, along with purchasing some shares from some early investors, and then $1.4 billion was to set up WeWork Japan and WeWork China. And they've set up some corporate structures and some JVs there, but this is now truly a global play with one of the preeminent global investors on the planet, Masayoshi-san. All of that brings us to today. We are exactly halfway through 2018, and this year they raised a debt line of $700 million. Now, don't be too alarmed by that, because once you've raised this kind of capital, you're usually driving things at a level that you can afford to pay the interest and the payments on that debt. And last year, at the end of 17, they had $900 million in revenue, 200,000 members. Those are people like you and me, the total number of bodies that are inside their rented workspaces, and 200 buildings in the United States. That is pretty amazing. And so you can see people investing in this valuation. This is not Twitter without a business model. This is a company with a real business model that's incredibly simple. Building, people, temporary rent, build the workspace out and put things in place so that you and I can use the workspace and focus on startups and companies that want to use a little bit more styled location than just a bland, basic office. But scaling is important. But let's take a look at what's happening. Scaling is, as you get bigger, you drive your costs down. Let's see where that is showing up in facts and figures. Now, they don't like to talk about their financials much, so we have to just pull out of them what we can. But at the early part of 2016, they indicated they were spending about $14.1 thousand per desk. In other words, that was their investment per desk that would show up in one of their locations. A year later, they said that they had driven that down to $9,500 per desk. So as they're driving the cost down, they are driving scale into the business. So as they continue to get large, this is one of the metrics that if they think about an IPO that I'm going to be looking at. What's your cost per desk? You presented some figures that were pretty compelling. Were those true? And where are you today? If you can continue to drive this, now you're scaling the business. Additionally, they got together with Zen Desk. We all know what Zen Desk is. Very helpful set of tools. They made a deal with Zen Desk where WeWork Services would be a little subsidiary that would resell Zen Desk products. Additionally, there was another small venture that they built, which was We Live New York, which is kind of a live and work space. So they're focusing on the kind of things that the services that the startups are going to need. Workspace, places to live, and services through Zen Desk that are going to be right in front of you. So where are they headed? Well, one of the things to look at a business like this is it's very capital intensive. That's why there's such large numbers that begin with a B that have been invested in the business. It's said, based on things that the company has said, these are the best estimates we have, that they're running about a $2 billion a year expense clip on $18 billion of total lease value. In other words, they've signed leases that are going to cost them $18 billion over the next so many years. That's averaging out at about $2 billion a year in rent expenses. Well, remember, you have to get a building, you have to dress it up, you have to put the facilities in place before the first startup with 10 guys or girls can come walking in and rent it. So it is capital intensive on the front end, but the model has shown that it's worked. And again, if it's really simple, you can scale it, but it also can be replicated by others. So you have to go fast and stake your claim to the market share. However, they're saying that they're going to be able to convert on the revenue. Remember I mentioned that they had 200,000 total members right now? Well, they're saying by the end of 2019, they hope to have 400,000 total members in place working at their locations and be running at about a $2.3 billion clip at the end of 2019. That's not $2.3 billion of revenue in 2019. That is a run rate of $2.3 billion as of the end of 19, meaning going forward in 2020, they think that run rate and their revenue is going to be in the mid $2 billion range. That's phenomenal growth when you think of where they came from. Now let's go take a look at why it works and why it's grown so fast. Uber and Airbnb were simple concepts, just like WeWork is simple concept, except that WeWork has to dress up the location. Uber and Airbnb don't. Here's my house, this is what it looks like, you can rent it for a day. Here's my car, I qualify, get inspected by Uber, it's clean, it's in good condition, it qualifies, I'm a good driver, I can now rent my car by making myself available in the Uber app, find out where you are, pick you up, take you to where you're going, we trade some money and a revenue share to Uber. Very similar to how it works with Airbnb. Now, what you have with WeWork, you do have to invest that money, and it's where I talked about that they have very positive effects of scaling of the amount of dollars they're spending. First, they have to lease everything, then they have to outfit it, then they rent it to you and me. But really, it's an amazingly simple concept. So you don't have to invent the next high-tech company to find a really great concept that can have some legs and go forward. Something simple that scales like WeWork, and you could be off and running. I happen to like this company and I'm rooting for them because I think some of the other office sharing and office rental companies, they don't get what startups need. Open spaces, good facilities, things that have a vibe to them. WeWork gets it and makes great space for startups because they are a startup. They may be 8 years old, but they're sticking with their youthful roots and they know where they're going. Speaking of going in the right direction, go to my Instagram account and please look for the poll and let us know what company you think we should cover next. I love taking suggestions for case studies. It doesn't have to be tech. It can be something simple like renting out office space, but I want to know what you think. Leave a comment below. Check out that poll over on Instagram. I'm listening to you. Remember, here at Valuetainment, we're on a mission to 1 million subscribers, and when we get there, it'll be the first annual Valuetainment conference featuring Patrick Bet-David, yours truly, the Biz Doc, and other people to make you better, your company better, and the people that you touch with that company better still. Until next time, I'm Tom Ellsworth, the Biz Doc, and I hope I left you better than I found you.